Is it too late to invest in North Texas real estate? The answer is no. I could end the video right there, but I don't think it would be very helpful. Stay with us, we'll tell you more. I get this question pretty often. Not only do we have buyers moving into North Texas, but we have buyers and sellers in North Texas already that are interested in not only buying their own homes, selling their own homes, really cashing in on the current equity, but also people are still asking us, is it a good time to invest? And the answer is absolutely yes. It's still a good time to invest. When is a good time? Today is a better time than tomorrow. Let me tell you why. This video has lots of numbers in it, so I'm going to make sure we have these pop up on the screen, hopefully not to confuse you, but to really give you the full picture of what is happening in North Texas. I am specifically focusing on two smaller suburbs north of Dallas, Salina and Prosper. They are two fast-growing suburbs with highly rated school districts, and we have a ton of people moving in from other local cities and from out of state. So these two are the ones I'm going to focus on because the growth has been exponential over the last 10 plus years. So let's chat a little bit about those numbers. In the last 10 years, we added 1.2 million people to the Dallas-Fort Worth market. What does that mean for you if you want to invest in real estate? Let's talk about Prosper first. The Prosper population growth. From 2010, it was approximately 9.7 thousand, to 2021, where it is over 29,000 population estimated. That is a growth of 218%. How does that growth compare to the actual homes available? Well, not great, to be honest. When I went to grab the data, I couldn't grab the exact same years for each of these data points because I had to utilize multiple sources. So from 2011 to 2019, Prosper had a housing growth of 148%. That is compared to similar years where we saw the growth of 218% in population. The median home values in Prosper between 2012 and 2021 was a growth of 96%. The rental rates during that same time period grew by 76%. So we are seeing these numbers go up across the board exponentially, and we still do not have enough houses to house the number of people moving into this market. Salina is a smaller town. So let's discuss the growth of Salina because they have a ton of future growth planned, and we know we have the land to accommodate. So in 2010, the population of Salina was approximately 6.4 thousand people. In 2021, that population estimated was over 23,000 people. That is a growth of 259% population growth in Salina, Texas. Between 2011 and 2019, the housing or number of homes available grew by 86%. The median home value in Salina between 2012 and 2021 grew by 212%. That is a significant growth. The rental rates during that same time period increased by 38%. One of the big differences there are the number of rentals available during that time. In the earlier years, we had fewer rentals. We are catching up and seeing more rentals come into that Salina housing market. Okay, hopefully I didn't bore you with the numbers and you're still here because hopefully you have questions. How can I invest? Should I invest in a rental property, which we call a hold property? What does that look like? What is the process? So I'm not going to go down every option of buying rental properties, but I'm going to talk about the more conventional ways that most of our buyers get into the rental market. So a question I'm asked often, do I need to pay cash for a property if I want it to be an investment? No, you do not need 100% cash. However, I have plenty of clients that are looking to buy investment properties. They are pulling money from somewhere else and maybe they're putting it into real estate as their investment. So it is not uncommon to have cash buyers when we're talking about rental properties. However, many of my clients working to buy investment properties are ready to put down 20 or 30%. So that's a little bit easier number to stomach depending on the purchase price. Once we've decided we have the cash, we have the financing, so a little side note there, we definitely want to chat with a lender if you're not paying all cash because there are some steps you need to go through. You need to be able to qualify for that property with the assumption that it will have a land or that it'll have a tenant in it and that you will be a landlord of that property, not just a second home that you're incurring a mortgage payment. The next question to ask yourself is, do I want to be a landlord? What does that look like for you? Do you want to be the property manager? Do you want to be on call when something breaks? Do you want to be that first line of defense and really have full control of the property? Many of my investors are the landlord. Now, I have lots of other investors who do not have the time, they don't have the ability, or they're not even geographically available to be a landlord. So they utilize a property management company. We have lots of referrals for that. Property management is something that you would want to interview multiple companies, really find out what they offer, what their service is all about, because it's their job to help manage and make sure your property is in good repair and maintained, which means they need to communicate with you regularly if they are receiving maintenance requests from tenants. So that is one of the big things you will want to work with on your property management company if you decide to hire a property manager. The cost to consider: once we have the basic home price, we know the approximate rental value based on recent comps, then we want to talk about, is this going to be a cash flow property? And does that matter to you? I have many investors who do not care if they actually cash flow on a month-to-month basis. What they're looking at is long-term ROI, return on investment. In order to calculate your return on investment, you're gonna need a few numbers, at least for some quick calculations. You're gonna need the PITI, that is principal, interest, taxes, and insurance. So that is specifically if you are getting a mortgage, say you're gonna pay your 20 to 30% down, then you're gonna have your normal mortgage payment just like you do with any other home that you might own. So the PITI is gonna be your monthly payment. Then because it is a rental property, you are gonna need to set aside some repair and maintenance fees, maybe 8% a year, right? You just want those funds set aside in case something does go wrong. You're not having to pull money out of pocket. Outside of that, if you hire a property manager, you are looking at property management fees, somewhere around 6 to 7%. And you might also be incurring leasing fees. If you are hiring a realtor to put your lease on the MLS, which generally is the fastest way to get a tenant back in the property so you don't have lost rental days, then there's going to be a leasing fee. For many companies, it is 1 month's rent. It may be some variation or some percentage of that, because there is going to be the fees incurred to put it on the MLS, plus potentially a buyer's agent bringing that tenant to lease the property. So there are commonly 2 agents involved in that transaction. So I mentioned the ROI a little bit earlier, that return on investment. If you need the property to cash flow, then we need to make sure that these numbers all make sense in advance of purchase. If you really just want to make sure that this is covering the cost of your mortgage, so you have somebody paying your mortgage, right? They are renting from you, you're paying the mortgage, and basically you're just gaining that benefit of the year-over-year annual increase. And what does that look like? I did utilize several resources to gather this data, but specifically for the average return and property value increase, I used neighborhoodscout.com. Based on their data, in Texas, the annual average value increase since 2000 is about 4.6%. Not a bad return for having somebody else pay your mortgage. When we look at year over year, this last year was vastly different, and we saw significant increases from 2020 to 2021, and we're seeing increases again in 2022. So that total value increase since 2000 is 165%. Imagine if you bought that property in 2000, your mortgage very likely might be paid off here in 2021, 2022 if you did a shorter note. And not only do you own this property free and clear and you're cash flowing every month, you have equity built into that property, a significant amount of equity. So what many of our investors do is they purchase one property with the cash down, they give it a little time, maybe 6 months, and then they do a cash out refi. So they pull that cash value back out of the property and they turn around and they buy a second property. So this is how many real estate investors build wealth, right? You wonder sometimes, where are they getting all the cash? They're getting the cash from the last property they purchased or from a property 2 or 3 purchases ago. So keep in mind, there are lots of ways to capture that cash, put it into real estate, and let it do the work for you, just because we have a natural market that increases year over year. So there's a ton of potential in real estate investing. This particular was about holding it, which means putting a tenant in your property. There are lots of other ways to invest in real estate. We would love to chat with you about your options, your goals, and what makes the most sense for you and your needs. So reach out to us. We would love to chat. Not only do we work with investors in this market, but we are also a part of the community, and we would love to help you join our community. See you around town.